Check, please.
Welcome to Everything Money. If you have ever been confused about what a stock split is, the outstanding shares, join me in watching Paul and Mo help us through this process of what a stock split means when companies do it. Tesla is hinting this might be coming, so we'll show you what happens when this occurs and how it affects you as a shareholder. I bring your questions about stock splits, stocks in general, to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll help us. They'll guide us through this process of understanding what the heck's going on out there with these confusing numbers. I'll give you Paul and Mo. Welcome, Paul.
Guys, follow us on Everything Money Investing, our Instagram account. It's awesome. It's growing by like 100 a day or something.
It's crazy.
And then follow us personally. Don't ignore that part because
Yes.
blue check marks don't happen by accident. Instagram hates me. They're like, no, we're not going to give you the blue check mark. I want to kill them. Guys, stock splits. Big thing here because it's so misunderstood. Stock splits are purely a marketing event. Okay? So this whole conversation started because of Berkshire Hathaway. Let's go look at Berkshire Hathaway stock. So here's our Everything Money software. Let's look at Berkshire Hathaway. Class A shares. Look at that price.
Love it. Oh, boy.
$450,000.
Jeez.
$450,000. That is literally the share of a stock price for them. Now, what does that mean? If stock price mattered, that means that should be the most expensive company in the world. Most valuable company in the world.
You're right.
Where's their market cap? $675 billion. Let's go to Apple. Apple is $180 a share. Their market cap is $3 trillion.
I'm already confused.
Right. So what is a stock? What are these stock prices? Let's say a company is worth $1 million. Let's say two companies, each worth $1 million. Let's just start back over here. Two companies worth $1 million each. All right. Very simple. Keep it straightforward. One has 100 shares and one has 10,000 shares. How much is each stock price? $1 million divided by 100 is 10,000. This share price is $10,000 a share because you're dividing the $1 million value by 100 shares. This one has 1 million shares into 10,000 shares. $1 million value into 10,000 shares. $100 a share. The average moron will say this one's worth 100 times more than this. No, they're exactly the same. They're exactly the same. Their value is exactly the same. Share price times number of shares is the market cap. That's it. Why do companies split stocks? Why did Tesla do it recently? Why did Berkshire not do it? Companies split stocks in order to make it more attractive for the average investor because they feel like when they buy more shares, they're getting a bigger piece of the company. Oh, I get to buy 10 shares versus 1 share. I get to buy 10 shares versus 5. That's just stupid. It's all malarkey. And the reason why Warren Buffett never split, by the way, Berkshire Hathaway back in the 70s was $40 a share. I think originally when he first took over Berkshire Hathaway, it was $7 a share. Now it's $450,000 a share. He's never split it. Why? He doesn't want speculators. He doesn't want average people buying his shares. He wants people who are serious about the long run. And if you're willing to pony up $450,000 for 1 share, you're probably going to be in it for the long run. And that's why he did that. And companies who are selling for, I'm surprised Amazon hasn't split their stock yet.
I am too. I'm very shocked.
They're at $3,500 a share. But look at Tesla. Tesla hit $700 a share and then split to like 120. I don't know what the exact number was. And now they're back up again. Why? Because people see 120 going, oh my God, it was 700 before. Now it's 120. It's so much cheaper.
You're absolutely right.
Tesla
Elon tweeted just before that the shares were priced too high. And I actually got that confused with, well, the valuation is too high. No, just the price was too high.
Yeah, that doesn't make any. The price is merely a reflection of number of shares outstanding in the market cap.
Yeah.
That's it.
It's a way, I mean, if you take Tesla, for example, let's just call them $1,000 now, and they're going to do a 10-to-1 split. They're going to make this thing come down to $100, and it's going to look very appealing to younger investors because you're getting this cheaper. And
they have $300 to invest to get 3 shares now. Before they could only buy 0.3 if any shares at all.
So this is a psychological move that a lot of new companies, a lot of exciting companies will do to get unexperienced people in there that don't understand this.
And that's what they want.
Yep.
They want the hype to go in there. People buy the shares at 100 and drive the price up. That's all it is. Guys, you got to remember that stock splits have nothing to do with changing the value of the company. It's purely for image. Nothing has changed. Nothing. Just do it on every single company out there. Berkshire Hathaway is $450,000. Apple is $180 with $3 trillion. Look at Amazon. Amazon's share price is 3,400. Its market cap is 1.7 trillion. So Apple's almost double the market cap, but the price is 5% of it.
Mm-hmm.
Think about that. 180 versus 3,400, but the company's more valuable. It's just more shares outstanding. That's it. That's it. There's no difference there. It's a purely psychological thing to get suckers in to buy more shares. That's all it is.
So we're making this video for you at home to be weary that when Tesla does split down,
It doesn't make it cheaper.
Yes, you're not.
It's not making it cheaper.
Exactly.
It's making the nominal price less.
sound
That's it.
better.
That's it.
Yeah.
All they've done is increase the number of shares outstanding.
And
A 2-for-1 split doubles the number of shares outstanding because now you're splitting everything in half.
Exactly. And it's going to look like if you hold it and they do a 2-to-1 split, you're going to have double the amount of shares. So it's going to look like you own more, but the price of the stock price was cut in half. So
How often is
Same
this
thing.
reversed in the opposite direction?
Oh, they'll do a reverse split.
do
If a
reverses.
stock goes, because remember, some stock exchanges will require stocks to be over $5 a share.
So I think someone in the hotel business did it last year.
Well, Citibank did it.
Okay. But I'm
Citigroup
thinking more
did it.
recent because of COVID. There was a company that was like selling around like it was like $3 a share, and they did a 7-to-1, so it put the price up to like $21 just because when you look at a company that's $3, you're like, oh my god, they're going to go bankrupt.
Something's wrong.
Yeah. So it looks a lot better at 21 than it does at 3.
Look at Citigroup. Look at this plummet in their stock after the financial crisis. So they did a reverse split.
Make it look better.
Okay, yeah. So like, look at $550. Let's look at the Citigroup reverse stock split. Let's look it up. Citigroup reverse stock split was 10-to-1, and that was in May of 2011. It was a 10-to-1 split, which means they decreased the number of shares by 10 times, which makes a $4 share $40.
Why is Berkshire a stock that's well over $400,000 a share? Why have they not split down?
Well, I said that before because he doesn't want speculators in there. He wants people who are serious for the long run. And if you're willing to spend $400,000 on a piece of stock, it means you're going to be there for the long run.
You're not interested in buying one of those, are you?
I've had 10 at one point.
Oh.
Yeah, I bought them at 80,000 a share.
Oh, wow. That was.
And I sold them at really early, like 120 or something. I don't remember what the exact number was.
Any regrets?
I mean,
No regrets?
2020 vision in hindsight, of course, but I bought it because I was like, I think Berkshire's too big and not going to be able to really get outsized returns like I can, and I can't do options on Berkshire stock.
Hey guys, Seth here jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of $1,000s, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I. You get the 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
Mo, do you take advantage of these stock splits, potentially a Tesla stock split, in terms of trading?
Yeah, for sure. I mean, even when you get like a Tesla, so the point of it, like I just said, is it's going to create that excitement. I don't remember the last time they did a split was here. So let's see if we can just zoom in on this. Give me 1 second. Okay, so here's our split. But you can see right after that split happened, happened right here. Right after that split happened, look at this. This thing went crazy. People probably didn't understand what it was, and it went crazy. And since then, I mean, we're way up here. We're in the thousands. But you can absolutely, when news comes out, take advantage of this stuff. Go and swing trade it. Go and day trade it. There are so many opportunities that you could take advantage of people's non-understanding of things that happen in the market. That's a great point. Excellent point.
That's our take on stock splits. Be careful out there. Don't buy into the hype. And if you need help, you can come to this channel. We will coddle your soul and get control of your investments moving forward. So join the software. You will love it. And I'll see you next video.